Morning, everybody. How are we all doing? Morning, Steve, Neo, Callum, Paul, Mumo. How are we doing? Jumbo. Market's just opened. No trade this morning on the FTSE. And where are you? There. Tight range on the FTSE this morning. So no trade there because the range is just too tight. 85 on a minimum of 93. But just about 10% on the DAX. But again, very, very gappy open. Very light liquidity. So that was the close. Then the candle jumped up to there at the open. So there's no volume in the market again today. So just be very careful. I'm on the verge of deciding to just scrap the rest of August for index opening range breakouts because there just doesn't seem to be any volume at the moment. The opening ranges are really small. The pre-market ranges are really small and the volume's really light. So we had a down day yesterday. We had one there. We had quite a big one yesterday on the FTSE. So it's not, we've been just grinding most of the time with these indices. There's no real directional bias, no volume or anything in the market at the minute. Almost got triggered into a short on the DAX, not quite. But yeah, a bit rubbish at the minute. Morning, JC, Harold. So I've discovered the Holy Grail. Just put that out there. There's only 19 of you in here at the moment, so don't let anybody else know. But I have discovered the Holy Grail. 100% strike rate so far this month. Not bad. Admittedly, I haven't traded every day this month, but 100% strike rate's not bad, is it? I'll show you in a minute. Let's just see what happens here. Tell you what, while we're waiting for the market to actually get its first coffee in, let's have a look at the news. So today is FOMC day. There's no news today. Again, just go and do something else today. It's unlikely you're going to get any movement in the markets. If you're lucky, you might get a rotation day. You can actually get some yesterday's high, yesterday's low type trades out of, but it's dead today. We've got crude at 3:30 as usual on a Wednesday and FOMC at 7 o'clock. So the market is going to be preparing for FOMC to see if there's any directional bias given by the US as to when they're going to start dropping interest rates. Goolsby came out last night. Bowman came out last night and said, we've seen some recent progress on lowering inflation. Inflation is still uncomfortably above the 2% target, as we know. Still see some upside risks to inflation. So as long as these upside risks exist and the Fed believe in a majority that there is a chance of further upside movement on inflation, there will be less inclined to drop interest rates. So if we look at where we are, the US is at 2.9 now. We really slowed down. The last inflation drop was a 0.7, same as we had in New Zealand. So the last one was a 0.7, then it slowed right down to a 0.1. Possibility of a pop in exactly the same way as we got with the pound. We had that big, strong drop, it slowed down, and then we pop. That is the usual way inflation works. It does that. It comes down in a market structure like way. So still massively high on the interest rates. There's a chance of an upside pop. So this evening's meeting is quite an important one because obviously, or the minutes, because we want to see some kind of guidance as to when they're going to drop interest rates. At the moment, I think the market is completely factoring in a September drop. But, from what Bowman said last night, if they see inflation tick up again, it's not going to happen. So again, very, very hard to pick a direction on the US. 1 week we're massively bearish. The next week we're not sure. Then we're like, it could go up again. It's just changing constantly. Other overnight news, not a lot. We had a little bit of Japanese import-export news, but nothing exciting. So there's nothing there. There's nothing forecast for the day. So go and do something else today, basically, and wait for PMIs. PMIs tomorrow, that's when we're going to start moving stuff. But FOMC could well put a real move in this evening. We'll have to just wait and see what they come out with. So, yeah, that is your news for the day. Really? I'm long. Wow, look at that spread. I'm long on the FTSE, not because the FTSE's broken out, because the spread is ridiculous. There's just no volume, is there? So yeah, long FTSE on the 5-minute ORB. What can you do with that? A load of rubbish, isn't it? So we'll see where we go. Morning, Virginia. So there's your news covered. Nothing exciting there. Currency strength chart kind of shows you what we're dealing with at the moment. There isn't anything strong. There isn't anything weak. It's just crap. It's sideways. Nothing's got any momentum. The only thing that is weak at the moment is the yen, which we know because it's pulling back off the back of the what's it called? Interference. So yeah, it's just nothing happening, is it? It's really hard to stream about something when it's nothing happening. It's almost like, I know, I'm a painter and decorator. I'm going to do a stream today. I'm going to watch paint dry. Here we go. Yeah, it's nothing happening, is there? So we're going to go look through all the pairs today and see where everything is. There's obviously potential movement. We know where things are likely to go, but it's just nothing's going anywhere at the moment. Not on their way, are they? So look at this thing. It's not even ticking. The DAX is not even ticking. Look. I'm not sure I really want to get involved in this today. I think I'm just going to shut it down. I'm not. It's just, it might break, but I mean, there's just no volume. It's just not worth it. It's not worth taking the risk. I got hedged yesterday on the DAX. Managed to just about get out of it with 70 quid. I got hedged yesterday on the Dow. Made a loss of $330 on that. It's just, the market is just so wishy-washy. Look at it. It's just, look at that volume coming in now. Look. But you see how quickly that's like, no, it's dead, totally dead, not moving. And a second ago, it was like tick up, tick up, tick up, tick up, tick up, tick up. It's like picking up all of a sudden. It's just a load of orders coming into the market. And it's just filling the opposite side of the order. There isn't any volume there. There's just nothing you can do with it today. That's going to hedge. So I'm going to be stuck in a hedge on the FTSE. I think this might be the last day on the DAX. I don't mind watching it, but I don't think I'm going to bother trading it anymore. Not for the moment. Market's too quiet. Hard to make money out of it. Right. So we'll look at all the FX pairs in a minute. ADR dashboard, totally dead, totally quiet. There isn't anything hit ADR. Look at the euro pound. It's moved 8 pips today. Single digits. We've got a few other things that have moved double digits. Euro US dollar. Aussie US dollar. So Aussie is obviously an Asian pair, moves in the Asian session. It's done 14 pips today out of 61. So yeah, absolutely dead. So we've got some weekly ranges. We looked at these briefly yesterday in the New York session. New Zealand dollar CAD. So this one we had a gap down and a spread candle on Monday. So I kind of said take half of that off because it's not really a weekly range hit. But this morning we pushed up a little bit higher. We did hit roughly 125 of the AWR there. So there's your weekly range hit. And it's coming down very nicely. I'm short on that. So that is a H4, oops, wrong dash. That's an H4 RSI extension and also an AWR hit. So good confluence there. Target for me. Could be anywhere, couldn't it? So New Zealand dollar dropped interest rates, so did the CAD. So there's no real bias long or short on this at the moment. Need to watch that area there. Other than that, a return to origin move, there's absolutely nothing much in there that you can really look at and say, there's a good support resistance zone. It's a little bit of accumulation in there. There's a little bit of accumulation in there, which is these two propulsion gaps. So those gap targets to the downside. At the moment with this market, I think I'm just going to err on the side of caution and just go for the closest target on it, really. New Zealand dollar, US dollar, also extended. Second entry taken on that one this morning. So average is now nice and close. Target, I'm going to move up to that propulsion gap. So basically, that's entry one. Entry two taken, average is up there now. So that's a nice, easy propulsion gap target before that support. And that's obviously a weekly range hit as well. And US dollar Swiss is also a weekly range hit. I'm not trading any Swiss franc, but that is also a weekly range hit if you want to get in on that one long. You've just had the reversal alert this morning. Beautiful wicks to the downside. Reversal alerts kicked in. We're retesting at the moment. So springboard back up into that resistance. Watch that area as well. So there's a nice looking long opportunity there. So there's your weeklies. Monthlies we can't really do anything with at the moment this month, unfortunately, because they all got skewed by the 300 ADR move last week or week before. So those are your ADRs and AWRs. RSI extensions, there's nothing much on the hourly to look at today. US dollar Swiss is extended on the hourly still. But your main movers are Aussie US on the 4 hour. Again, already in that one short. So that's just starting to roll over, it looks like. Euro US dollar also extended on the hourly. Got 2 on that at the moment. Yeah, I'm going to go 125 ADR to the downside, so just adjusting targets down to that propulsion move. So looking at that area there, it's being retested. Obviously, this is US dollar, so this evening is when we're probably going to get that movement. Pound US also extended on the 4. That's extended and embedded. Very strong 2-week rally on that pound at the minute, or rather weakness on that US dollar. So I got 2 entries on that one. Didn't quite get the third on this morning, unfortunately. If it rallies up today towards ADR, I'll be getting a third on that one. So target on that, I can move down as well. Actually, that was yesterday. Shame I couldn't get that on. Whoops. So I'll look to target that propulsion move now to the downside. If we get a rally today above yesterday's high, I'll be taking a third, which will bring the average up. And then I'll start to target that area there, which is within ADR. And we have New Zealand CAD, which I've already covered. That's a nice, easy one. That's extended on the weekly. Yeah, that's a weekly extension. And we got New Zealand US and US Swiss we've covered, which is a weekly. And I think it's New Zealand US. Yeah, so New Zealand US and US dollar Swiss, which were the weeklies. So those are the moves there. Just see what's going on with this. Yeah, I kind of knew I was going to get hedged today. There's just no volume. Nothing you can do with it. So, the likelihood of getting an ADR hit today, very unlikely. Downside, I'll take yesterday's low. Upside, There's just no upside target really until you're above ADR. It's not going to get to ADR today, is it? I mean, when the market's like this, you're lucky to get to ADR. So the targets that I've just set there, that's 2.5 ADR to the upside and just under 3 ADR to the downside, yesterday's low. So yesterday's low is an obvious downside target. Upside, it's very difficult to pick. So I think if we do break long, I will just watch price action. I'd much rather we break short because we've got an obvious spot to aim for where we're going to find some limits. So we go down there. There we go. Glad I got out of the DAX. There's no point in being any of this morning. It's just a pointless exercise, and it will be this afternoon as well. So if you're trading SIH or ORB at the moment, forget this afternoon. I would. It might be busy, but you know, FOMC this evening, so the market's not going to want to put a load of stock orders in before it knows what the dollar's going to be doing. So you're more likely to go nowhere. Right, so I'll do an analysis of all the FX pairs, but I did kind of do it ad hoc yesterday as well in the New York session because it's quiet. So I did a little bit of analysis there. So I doubt it's going to be much different to what I did yesterday afternoon, but I'll whiz through it anyway. But I just wanted to quickly cover the Holy Grail. I need some music, don't I? So this strategy I kind of was talking about last week before, which is a hedging strategy, which it's kind of been on my radar for a while. I've known about it for a long time. And I have tried to trade it in the past, but a long time ago before I knew what I know now. So I thought I'd have a go at it again. And so far this month, I've done $2,000 profit with 100% strike rate. So you can only see a couple of days there. There's a 240-day there. There's a 389-day yesterday. Bring the P&L up. And it's just hedging the pound and the euro. So it's the euro US dollar against the pound US dollar, euro and pound, euro and pound, euro and pound. Yesterday was the euro and CAD. Yeah, because yesterday we had the Canadian news. Yeah. So all it's doing is basically getting in to two currencies at the same time. Wrong chart. Ahead of news. So the whole strategy is super simple. A 3-year-old child could do it. No, you've got to be able to read. Go a little bit higher. 4, 5-year-old. Yeah. So yesterday, we had Canadian CPI news. So I took a trade on the Euro CAD and the Pound CAD because the CAD is going to move. Yeah. It just so happened before the CAD moved, the others moved far enough for me to actually get into a profit and bank it anyway. So I took 2 trades. No, I didn't actually bother yet with the second trade yesterday. So the reason I took that trade yesterday was because there was news on the CAD. Today, there is news on the US dollar. So the idea being is in the morning, when you start the London session, or an hour or so before the news, whichever you want to do, you basically, and I find it better actually in the London session to do it, but you just basically take a hedge. So we are anticipating one of 2 things happening today. A really quiet rotational day where not a lot happens. Yeah. So there'll be orders executed in both directions by the banks because they need to do it. And later today, a potential huge amount of volatility on the US dollar. So what will happen today is the market will either sit there and do not a lot, or they will place orders in preparation for what they anticipate happening on the news event. And it doesn't have to be FOMC, it's any news. CPI. Tomorrow you can trade the PMIs for the euro, you can trade the PMIs for the pound, you can trade the unemployment claims and PMIs for the US. On Friday, you can trade retail sales for the CAD, or you could trade, that's news, that's talking hedge, you can't trade that. So you trade the CAD on Friday, yeah? So it's either going to do that, or we're going to get some movement into the US dollar in a direction ahead of the news because the market is anticipating what's going to happen. So literally, you just go, right, I'm going to trade the pound against the US dollar and the euro against the US dollar. And what I'm looking for is one of them to move more than the other one today. That's it. So you place a trade with exactly the same amount of risk over one ADR on both of them. If one of them moves faster and further today before the news comes out than the other one, you should be able to extract a profit. Yeah. So for example, and it doesn't matter what you do, you can flip a coin. Yeah. You go head, somebody pick, would you rather I go long on the pound or would you rather I go long on the euro? You decide my outcome today. Yeah. Pick one. Whoever comes in first gets it. And that's it. And then you monitor it throughout the day. And when you get a differential on your P&L that is positive, you take the money. Long euro. There you go. This is how random this is. Buying the euro, selling the pound. Yeah. There's my P&L. Okay. I'm $19 negative. Right. So watch this every half an hour or so. And what you'll find is if there's some large orders that come in the pound today in a bullish stance, we'll go into a bit more drawdown. If there's some large orders that come into the pound today bearish, we'll go into positive territory. That's it. If you don't get to that situation throughout the day where either there's been a big order in the pound or a big order in the euro, or they have started to pile into the US dollar ahead of the news, which is what we would expect, and you haven't had an opportunity to make any money, you wait for the news. And what's going to happen on the news? You're going to get a massive spike in the US dollar. And it doesn't matter which way that massive spike goes, it will push one of them stronger in one direction than the other one. Yeah, because if it goes long, we're going to draw down here, but we're going to go into profit territory on the euro. Yeah. At the end of the day, you look at your P&L. If you haven't closed it out, if you've got open trades, and you basically go, right, which one's in profit? So if one is in profit, so let's say, for example, the euro has got $450 in profit, and this one is $570 in negative on the pound, what we do is we close out that positive and we use 50 to 70% of that to shut that off. So you reduce the drawdown on that one. And then because we are now still in the trade, we have to re-hedge it. So we do exactly the same thing. We go short again on the pound and long again on the euro. And then we wait and see what the differential is tomorrow. And then we get out of it all tomorrow, or we do the same thing. We close out some profit and we close out some loss. So it's hedging, but multi-currency hedging. Yeah. So it's exactly the same as the position trader EA hedge strategy or the market reverse alerts EA hedge strategy, where we're just getting in on extreme movements. But all we're doing is we're going, there's news today. Something's going to move on that. Simple as that. And I've been doing this now for 2 weeks. Not every day, because not every day, like you see, there's no trades on Monday. Why was there no trades on Monday? There's no news on Monday. We had Wallace speaking at 2:15, but that was it. So there's no news. If there's no news, I'm not going to hedge because I'm not expecting volatile, fast movement. You could still do it because even on days where there isn't news, the market still moves, doesn't it? But that's it. Simple. Super, super simple. Now, there is a problem with the strategy. And again, this is why I'm trading it manually at the moment to identify where the pitfalls are. You could have an instance where the US dollar doesn't move on its news. It whipsaws. It just does that. Yeah, nothing happens. But what we get today is the pound rallying, which takes this into drawdown, and the euro tanking, which takes that into drawdown as well. So what you end up with is 2 drawdowns. So in that case, what you do is you go, couldn't make anything today. I'll wait till tomorrow. You just wait. That's it. So it's really, 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 really simple. But so far, I don't know how many trades I've taken. 1, 2, 3, 4, 5. I did take 2 yesterday, sorry. 6, 7 trades. 100% strike rate. Obviously, there's 50% losers in there because it's hedging. One's winning, one's losing, but the winner is more than the loser. So it's 100% strike rate. So yeah, interesting, isn't it? So we'll see how that pans out. Yeah, so far, and it's not going to set the world on fire. You're never going to make an absolute fortune because you're always going into loss on one, assuming the news works as it should do, which it always does. But that's the thing. This is the problem, isn't it? Everybody's trying to trade the news to make money. But what they're doing is they're trying to trade the news when the news is released. Get in before the news is released. See if there's a profitable position before the news is released. If there isn't one, the news will make one, and it doesn't matter which way it goes. One of them's going to lose. If this thing now, where's my ADR indicator gone? So if this thing now basically, you can see they're both pushing at the moment, yeah, which means that this is going into profit and that is going into drawdown. If this pushes because the euro's on fire today and the pound just goes, yeah, because the pound isn't on fire and they're not moving the US dollar, I've got an opportunity to close both of those today because the euro's popped. If the pound decides to go today and the euro decides, yeah, I'm not going to do anything, I'm going to make money on the pound more than I am on the euro, which gives me an opportunity to close them out. If they both do the same thing, i.e. the pound decides to collapse and the euro decides to pop, I'm going to make a lot of money. Yeah. Don't forget, you've got three currencies at play here, and that's the edge. The US dollar is the key currency, and that's why you should always cross with the one that's got the news, because the one that's got the news is the one that's likely to move the most. The market tends to stay a bit quiet on everything before that comes out, that news. So if you get a day where it doesn't, you make money. So I'm going to keep doing this every day as long as there's news. Tomorrow's a very busy day. And the thing you've got to be careful of with this is one of the problems is going to be, and I haven't experienced it yet, but I know it's coming. Today, for example, I'm going to get into these hedges. If I can't get out of them today, I've got a problem because tomorrow there's euro news, there's pound news, and there's US dollar news. I'm trading the euro, the pound, and the US dollar. So tomorrow there's an opportunity for both trades to go into heavy drawdown. If all the news goes completely the wrong way for everything, I could be in trouble. Yeah. So, but at some point, you're going to get a big, strong movement. And the worst case scenario is when you get one of those big, strong movements in profit, you close it out and you use a lot of it to close out the other one and you re-hedge again. If something's pushed really hard in one direction, it's likely to pull back, isn't it? So take a load of profit off and get in the other way. It's a really simple concept. There you go. We've got profit. No, we haven't. Not quite. Sorry. That's shot down and that hasn't yet. So it's getting close. But I've basically just been going, if I get $250 to $500, I'm taking it. I'm risking $1,000 per ADR. So if it moves there, that goes $1,000 into drawdown. No, it doesn't. It goes $1,000 to profit. If the euro does the same thing, the euro goes $1,000 into drawdown. So if that drops by 1 ADR and the euro US dollar drops by 3/4 of an ADR, thank you very much. Simple. That's the important thing. You've got to risk the same amount of money over the same distance of movement. Yeah, everything's got to be done by ADR. Anyway, I'll update you on it. But so far, I've been quite impressed by, first of all, the fact that it's super unstressful. Because it doesn't matter. If you suddenly see, oh, crap, news has gone against me, it's also gone with you. So it's really unstressful in that respect, that it doesn't really matter what the market does. You've always got an opportunity. The stressful part will be when you don't get out of hedges and you've got to then deal with them. But you just re-hedge and wait. And it's just a waiting game. You're waiting for the market to move. If the market doesn't move, your P&L's not going to move. If the market does move, your P&L is going to move, but it's probably going to move in both directions, profitably and loss as well. So I don't know. I can't test this. This is the trouble. It's very difficult to test this with a strategy tester. So it's having to be done manually. But anyway, I'm going to keep you updated on that. As I said, I've been doing it for a couple of weeks. I mentioned it a couple of weeks ago, and last week I've hinted on it, but looks good. So Callum, it's all up to you today. You told me to go long euro. So it's your fault. Everything's your fault. Whatever happens today, it's all your fault. We'll update you. Right. So let's whiz through all the pairs and have a look where everything is. We'll come back to that by the end of the stream as well, and we'll see where we are. So if you did take the ORB on the DAX this morning, well done. You've made about 9 pips. FTSE's absolutely dead. This is the same as, like, I don't know if you were in the stream yesterday, but this is an absolute textbook yesterday's stream. I remember I was talking about the inside bar strategy. Yeah. We ain't going anywhere. More bearish than bullish, but by probably a pip. So, yeah. Not a fun day so far. Right. Interesting one, yeah. Yes, hope it goes well as well, Callum. That is just a demo account. Full disclosure, it's not real money. I was looking at yesterday. I got all excited yesterday about it. I was like, I'm going to stick $5,000 in an account. Because if you think about it, if you're hedging 2,000, basically, that's 1,000 long and 1,000 short over an ADR. You should be able to do that strategy with quite a small account, because your margin call won't actually trigger very often, because you're trading both directions. So as long as the currency that you are hedging, which in that case is the US dollar, does move on the news, you're going to make money on one and make a loss on the other one, which means that your actual margin use is very small. So you actually need a very small account to do it. So it's quite a good one for people with small accounts to trade as a strategy. But I want to see it get into trouble. That's the thing. I need to see how to deal with the issues. I've got ideas how to deal with the issues, but like I say, it's not something I can backtest. I can build something for MT5, I think, that can do it, but I need to look into it, and it's a time thing. So anyway, we'll come back to that later. Yens. I'm going to quickly cover the yens to start off with, because I'm not trading the yen at the moment and it isn't doing anything. So this is this week so far on the yen. That is last week on the yen. We've got a little candle down there, but that's the vast majority of the range low. So as you can see, the yen, we are totally stuck at the moment. Aussie dollar yen, totally sideways. The intervention move, pullback, now where? I don't know. The market really doesn't know what to do with this yen now. So all these yens, basically, you're going to be moved on news. So it's basically the yen seems to be, and as I showed you this morning with the currency strength meter, the yen is very weak at the moment. So what it means is that the yen will be pushed around by the other currencies. So if the US dollar suddenly has a massive pop this afternoon, US dollar yen is going to go up, because the yen has nothing. The yen is dead. So it's exhausted by this movement. The market isn't putting any money in, but not pulling any money out to any extent either. So the whole thing is just completely sideways. So these yens at the moment, just not worth trading. Does anybody follow that guy that only trades pound yen on YouTube? I've forgotten his name, but there's a guy that owns a brokerage, sells courses, that only trades the pound yen and never shows you he's losing trades. Can't remember what his name is. Be interesting to see how he's getting on, because he only trades pound yen. What have you done for the last 2 weeks? How have you paid your mortgage? How have you paid your bills? Not moving. So yeah, Swiss yen sideways, dead. Euro yen, not doing anything. Raj, that's it, that guy. People are still following them. Afternoon, Vitaly. Morning, even. Pound yen, same thing. New Zealand yen, same thing. US yen, pretty much same thing. Obviously, the US is slightly weak at the moment because the market's gone, holy crap, they're dropping interest rates. Are they? I'm not sure they are at the moment after what was said yesterday by Bowman. But anyway, so yeah, you've got literally all of last week, most of this week, and half of the week before after the initial rally into the yen stopped. We haven't gone anywhere. So this thing is a total lottery. You've got to use stop losses. You've got to use risk reward. And as we know, that type of trading, very difficult to make money out of. So not really very interested in anything yen-based. Same with the Swiss franc at the moment. The Swissy, if you look at all the Swiss pairs, is all over the place. So we've got some pushing down, some pushing up. The vast majority pushing down, though, which means that we've got more strength than weakness in the Swiss, but it's not very strong either at the moment. So we've had this massive rally into the Swiss franc. Again, the same thing. If we look at the Swiss franc pairs and compare them to the yen pairs, they all look very similar, don't they? This is Swiss and yen. They're all Swiss and yen I'm showing you here. Can't really tell them apart from the whacking great text that tells you what they are. But anyway, you can't, the price action is the same on the two. It's safe haven run. It's what the hell's going on with the yen, stick our money in the Swiss at the same time sort of play. Again, Swiss has gone very, very, very quiet, very neutral. And will be pushed around by the other currencies. So again, a massive pop on the US dollar this evening will do that. A massive drop on the US dollar will do that. The Swiss is neutral. It's sitting there not knowing what to do. One of the things we need to also be aware of this evening is with FOMC, if they do make a massive move to or from the US dollar, that money's got to go somewhere. At the moment, there isn't any currency really that is massively strong out there. Pound isn't, Euro isn't, Aussie's not. Aussie's probably more strong than most, but New Zealand dollar, not really either. So where are you going to put your money if you've got to pull it all out of the US dollar? Somewhere safe. Where's that at the moment? Swiss yen. So those two are possibly going to power up if we get a big drop on the US. Equally, if you've got your investment in the Swiss and the yen at the moment, which we know the market has because it's been massively strong, and you want to suddenly go, right, we need to start buying the US because they're not going to drop interest rates, you've got to get some money from somewhere. Where you're going to put it out of your Swiss and your yen investments. So the US dollar is going to rally and the Swiss is going to drop and the yen is going to drop, which means they're all going to move. So quite an important one this evening if we get some guidance from the US, from the Fed. So all the Swiss franc pairs as well at the moment, very, very difficult. They are moving a little bit more than the yens. So, I've got a New Zealand dollar Swiss trade. No, I had a pound Swiss trade on. Sorry, I'm out. So I got out of the pound Swiss yesterday, by the way. Got to say about that this morning. So that was the pound Swiss entry. I got out of that yesterday with whatever I got out of it with. $500. So I got out of that yesterday. It was the only Swiss franc trade I was in. I took it manually because it was a decent level. Covered that. So very, very nice monthly level, hit it. And I was looking basically for that sort of pullback. Exactly what I got. I got basically exactly to target. It was textbook. Exactly what I said was going to happen. Just took 3 days to start. But yeah, that held very, very nicely. So that propulsion sell, which is a 50% retracement, is holding. So there's a good chance it will continue come back down into here. But it's the Swiss. If the US suddenly goes this evening, we're not changing interest rates, they're going to pull a load of money out of the Swiss franc. That thing's going to go through the roof. If the US say we're dropping interest rates by 0.5% next week, the US is going to absolutely collapse. So you could get either way on it. So Swissie's just difficult. They will move, but you run the risk if any safe haven runs of that sort of movement. And for position trading, it's just a little too risky at the moment, just with what's going on in the world. Yeah, we've got too much Middle East tension. Monkeypox coming back. It's not going to be another pandemic. But, Swissie could really start to rally. So Aussie, At the moment, Australian dollar, strongest of the lot. So the Aussie, as you can see here, is up at 4.35%. They haven't changed their interest rates. The CAD have dropped. The Swiss have dropped, not last month. The Euro dropped the month before. We dropped this month. Forget the yen, I don't know what they're doing. New Zealand has dropped unexpectedly. So of all the currency pairs out there at the moment, these are the only two that haven't dropped interest rates yet. So the stronger of the two at the moment is the Aussie, because the US have indicated a 1.25% drop by end of year. Aussies have said, screw this, mate. We are far too high. Might be putting it up. All the New Zealanders now are going to say, that was more New Zealand than Australian. But yeah, that's potentially what's going to happen. So with all these Aussie pairs at the moment, you really want to be a little bit more on the bull side than the bear side. However, it's going to get there in a nice orderly fashion. There's no reason the Aussies should really scream away from any other currency apart from the New Zealand dollar. That would be one I'd be much more interested in long only on. So I've got one short on it from yesterday at the moment. We got extended on the 4 hour up here. So we got divergence now in play as well. So there's a good chance this is going to be an uneven M pattern. We're running straight into a propulsion gap, which is a break of that level before that collapse. So that is where the sell move started. Likelihood is they're going to start to add to that sell. And as it looks like this morning, that is what's happening. We are very extended. We've moved very far from the last low with no pullback whatsoever. So we are anticipating some kind of pullback, even if it continues long up into that area. If it just flags out here like this and just pops up, we're going to be getting into a second entry there, which will bring the average up into that propulsion gap, and it will need to pull back on that leg there. So yeah, short at the moment. Obviously, it's more long than short, but should be able to get out of either direction on that one. Aussie New Zealand, now this is the one that I would say I'd much rather be long only on. We've pulled back into support. The New Zealand dollar's dropped its interest rate without telling anybody, and Aussie is obviously not dropping its interest rate. So the differential between the two at the moment is getting closer. So the differential at the moment, we're on 5.25 and the Aussie is 4.35. So although the Aussies are not changing interest rates, their interest rate is lower. So what we will find is as this gets closer to that, the Australian New Zealand will probably start to accelerate. So it's certainly something I would reconsider if you are short on it, because it's fundamentally, it's more likely to pop. But right now you had an RSI extension on the 4 hour, which is starting to play. You've had an hourly extension last week, which didn't work out particularly easy because you're trading off the back of the New Zealand dollar interest rate drop. So that would be a trade you'd be thinking very hard about taking. But you have had an extension on the hourly down here as well. We've just had a reversal alert going this morning. I think we did get a reversal alert on the hourly yesterday as well, which got invalidated. Yeah, you would. Don't know that you would have actually. So this is probably the first reversal alert we've had in the last 2 days. So it's not come back to retest yet, but it doesn't have to. Obviously, some reversals just go. So yeah, good looking long there. It's pulling back quite nicely at the moment. If you drop down M15, you'll probably find quite a nice yeah, that has retested. So there's your retest. So there's your W pattern on the 15-minute. So we've got a reversal alert, potentially going to trigger short there, which obviously indicates that we're just sitting range bound at the moment. But yeah, like it as a long. I'm not training that one at the moment. Aussie US, I'm short at the moment. We had a 4 hour RSI extension. Again, this is more bullish than bearish because we're expecting US dollar weakness on interest rate drop. Aussies are not. However, the Fed might come out and say something completely different this afternoon. So I've got shorts on at the moment, 2 positions. If it does rally up into ADR today, we're going to hit monthly highs, and I'll be taking a third short up there, which means my average will be there, and that entire leg basically will want to pull back. So I don't have a problem with a short on it. You should be able to trade this in either direction as long as that US dollar doesn't drop stupidly fast. And as we know at the moment, it's not likely to because they still haven't dropped interest rates. So just waiting for that one to turn over and run. Afternoon, Blue Trader. Pontevedra is sunny today. Excellent. Not too bad here. A bit cloudy. So shorts on that one at the moment. Fundamentally, it's more of a long than a short. Obviously, we came out of this big contraction and we're starting expansion now. So you should get some decent movement in it. Covered the Swissies. The euro at the minute is holding these lows against the Aussie. So this is the area kind of said to watch out for last week. It's stuck there at the moment, not bouncing. So I wouldn't say this is limit order triggers here because you'd expect a bit more of a reaction. But obviously it is struggling to get through that level. But the market's a little bit shocked after this crazy 300 ADR move a couple of weeks ago. So it doesn't know really what to do with this situation, I don't think. This seems like the area of balance at the moment, so I can kind of see it just flip-flopping around there. Lagarde hasn't come out and said anything about further euro drops. We've had radio silence from Lagarde, actually, which is unusual from the euro. But at the moment, it's just a case of waiting to see when they do the next drop. At the moment, it's forecast for September because we said, or rather Lagarde said, we will drop interest rates, which we did, down to 4.25, and then we will freeze interest rates, which we did, and the next step is dropping interest rates. So as long as that inflation figure isn't going up dramatically, it is ever so slightly, they should stay with that, because after a pop in the inflation, we tend to see another drop. So if it stays stubborn, i.e. we get another ever so slight increase or a freeze, and it doesn't come down, that will probably put the brakes on that interest rate drop. So again, that will make the euro a little bit more bullish. At the moment, market doesn't know what to do with it because, as expected, inflation has popped. So it means they may do another pause on interest rates, which doesn't make it bearish, doesn't make it bullish either, makes it neutral, which means it gets pushed around by other currencies. If that's the case, you want to be selling it, because the Australian dollar should be stronger. So at the minute, you can't really do much with it. You can trade it in either direction and you'll probably be fine. There's no reason for it to go into some screaming run in any direction, put it that way. So if you can get an extension and a signal to get in, like you've had a 4-hour RSI extension there, that's a long opportunity. If it doesn't play out though, plan your trade for scale in down to the accumulation, and then it should bounce from there. Euro CAD, same thing really. This is a bear against a bear now, which is more of that. So trade it in either direction. There's no signals on this for me at the moment. I had one there last week, as you can see, which was shorted and was out in propulsion. So that was a nice easy trade. There was one there after that rally. I mean, you would have been in that already from here. So you would have scaled in probably 2 on that. And out on that. So yeah, just waiting for signals really. I hate hedging strategies. Okay. Sorry about that. I love them at the moment. There you go. We got movement. This is Callum's trade today. So as you can see, we are getting equidistant movement on the 2. Yeah, so what does this tell us? US dollar is rallying. Yeah, pound US dollar is coming down, euro US dollar is coming down. That can only be caused by one thing, bullishness. So there you go. So what's our situation at the moment? Nothing. Absolutely where we started. We're winning on one, we're losing on the other. So today, if this move was to continue at the same strength throughout the day, and this just ended up down here, and that just ends up down there, we close that and say, thank you very much, the $1,000. We close whatever you want of that and say, I'll take $500 off of my profit and I'll have half a position on that, and then add another buy on it and add another sell on that, and then rinse and repeat. Eventually that will get washed out. And the next day, if you get another ADR like that and another ADR like that, you can close both of those because you'll have more lot size on this one than you will on this one. You just close them both out and walk away with a zero profit, which is why you'll see on the P&L that day is a zero. So that day there was no trades because there was no news. That day was a zero because I was dealing with the hedge from the previous day where I made a profit and had to close out the whole thing the following day for a profit. So I couldn't close anything out there. So you're going to get days where you're not going to make money with it. But, you know, just by the pure odds of the market moving irrationally, at some point, if you see, and this is why I kind of want to build an EA on it, at some point when you see a $250 in there, just put it down there. If you make $250 a day from this type of strategy, yeah, that's $5 grand a month. A lot of people can live on that, but I'm not sure you'll do it every day. That's the thing. So anyway, but this is the experiment, tra-la-la. We're going to see. I'm not saying tra-la-la. That sounded weird, didn't it? This is the experiment, tra-la-la. Sound like I've got Happy Tourette's, don't I? That's his name. This is the experiment to see in the real world how this pans out and what problems occur. Yeah. So let's see. Look at it. Look, I got totally the wrong one today, didn't I? 1.5 hour on a DAX. Look at that. That's the one I shut out and said I'm not going to trade it. And that's the one that took off. Still wouldn't have been enough profit to actually pay for that yet, but not far off. If that gets to 2R today, that probably would have been enough profit just to pay that hedge off, which is unfortunate. Look at that. Not one bear candle, but every candle pretty much is gapped. Dead, isn't it? Dead, dead, dead. Morning, Mark. So EuroCAD also trade in either direction. So at the moment, just waiting for a setup. Almost got an entry this morning. If it had pushed up a little bit further, I would have done, but didn't. Euro pound, again, nothing much on this one since the last exit here. So that was my last entry, which I took off the back of this stupid 300 ADR rally out. Not quite got a signal there on Friday last week. You'd be in profit on that one if you took that one, but I didn't because it wasn't below the 80. So yeah, just sitting around. This is bear against the bear as well. Euro dropping rates, pound dropping rates. You should see just normal price action on this one. You'll get the odd period where, I mean, this was an anomaly. That was a weird anomaly. This move, wasn't it? That's, you know, we hit the month 150% of the monthly range in 2 hours. That was weird. There wasn't even any news. It's just the market sort of like every now and again, the market just seems to have a hiccup and it just goes, whoops. It's almost like someone's left their finger on a button or something in a bank. You know, it's just weird. No reason for it. That was one of those. So, but normally you're going to see, you know, usual price action. As long as the market's doing that, you're going to make money. So it's not a problem trading this in either direction at the moment. Just waiting for setups, as I say. You had an entry, depending if what you're trading. You know, I'm trading 80-20 at the moment. If you're trading 70-30, you would have been in there. You know, this is the difference between the settings. You would have been in, you'd have made money. I wasn't in, I didn't make money. Which is best? At the moment, that one. But the day where you got in on the 70 and it went like that for 3 days, you'd have gone, damn, I wish I'd have taken the 80 because I'd have been in there. There is no right or wrong. Sometimes one will work, sometimes the other will work. You pick, it doesn't matter. Someone contacted me actually the other day in Telegram, not the other day, last week or so, in Telegram, saying, why do you keep changing your entry levels? Why not? Was my answer. I don't really know. I look at the market and I think it's going to be quiet, or I think it's going to be busy, or it could explode. That's the reason I really just change and go, I'm going to be a little bit more cautious. It's risk management basically in a form used by an indicator. So I'm saying I want it to be a bit stronger before I get in my first entry. That's all I'm doing. I might regret it. I might look at my P&L at the end of the month and go, crap, I've made 7.5%. If I'd have taken the 70/30s as I was last month, I'd have made 15%. I don't know that. And it doesn't matter, does it? Because it's not about which is the right setting. It's about how you manage the trades after you get into them. That, missed it. If it had gone literally one candle higher, I'd have been in a short on that. But I wasn't. And what's the difference between it? The 80 level or the 75. If you'd been trading 75.25, you're in on that. Well done. I wasn't. That's the difference. It's a line on a chart. But yeah, so pick a level. But at the moment, I just want a little bit stronger movement, just because I want to get in later. I just want to be in lower drawdown for longer. I'll be much more happy with that than higher drawdown at the moment. Just because the interest rates are very sketchy, and so is the Middle East. Either direction, wait for a setup. Nothing exciting on that one at the moment. You had an entry on it on the hourly as well, somewhere around there, depending on what you're using, pushing up into there, which it's on its way to at the moment. Tomorrow, this one's going to go mad because we've got Euro, US, and Pound PMI figures. So we should see some good volatility on that tomorrow. Euro New Zealand have a long on at the moment. That's on its way to target. So that was the, you had an hourly extension there. That was also a 4-hour extension there. Yeah. So again, trade there. In. At the moment, I'm being uber cautious and getting out quick, just to get money in the bank, basically. So target is there. We have just broken that high of the last 4 hours, which is good. So that's on its way. That's weak New Zealand dollar, I think. Yeah. So a little bit of weakness coming into the New Zealand dollar at the moment. So yeah, in a trade on that one already. That's a beautiful support as well. Yeah, so this area is very good support. This is, depending where you're measuring it from and whether you're including that, it's somewhere between a 38 to 50% retracement on the leg as well. So good fib level. All the head and shoulders traders are shorting this. We've just broken the neckline. They all went short. They're all dead. Euro US, shorts on this one at the moment. Again, this could go absolutely anywhere at the moment. So I'm short at the moment with 2 positions on. We had trade there last week into propulsion, which hit target. We've got lovely propulsion gaps in play on this. That one's pretty much filled, but we've got a big propulsion move there. But this is the main one because it broke that high. So this propulsion move there is the banks, basically all the short sellers getting run over. So we'll come back and test that level at some point. It's going to be dependent on FOMC and the Euro PMIs and the US PMIs tomorrow as to when it hits it. It's either going to run away or it's not. Or we could easily get a double ADR day tomorrow because the Euro PMIs could all come out as massively negative. We hit target. And then the US PMIs come out massively negative and the Euro spikes against the US. Could go either way, could be. So it's all about the news. But looking for a pullback on that leg, and they'll use the news to move that move, to place that move at some point. All the pounds, Bailey, again, at the moment, hasn't said anything after the last interest rate drop. Bailey is speaking at the Jackson Hole Symposium on Friday. I presume that's at the Jackson Hole Symposium on Friday. Yeah, so he's speaking at the Jackson. Usually at the Jackson Hole, they don't reveal much about what they're going to be doing with their monetary policy. It's more a bankers getting together to discuss general economics of the world. So whether or not you get anything out of these talking heads on Friday, I think it's probably unlikely. But you may find that because Bailey hasn't spoken for 2 or 3 weeks, he drops a hint. So you might get some movement on that pound. We're still waiting for confirmation as to when the next interest rate drop is going to be. There's various talking heads think various different things. So, but we will see. At the moment, it looks like a nice little long opportunity because we are looking like we are supported here. The Australian dollar is strong, but obviously even a strong currency is going to have days and days of down when it's on its way back for the new leg up. So it can go in either direction really, but the overall on this fundamentally long term should really be much more bearish than bullish. So I'll be more interested in shorts, ADR hits to the upside, RSI extensions to the upside. They're probably going to play out faster than your longs. But either way, it's not moving for the last week and a half. So not a lot you can do with it. There's an hourly RSI extension and reversal alert yesterday during the Asian session. And it retested as well. But obviously since then, we're waiting for FOMC. This is the market waiting for FOMC, basically. You know, we're not going to do anything until we know what the Fed's doing. Pound CAD, very much the same sort of thing. Look at that long I got out of there. If only you'd known. Yeah, nice big move back up there. At the moment, more of a short. As you can see, you've got a triple RSI extension on the 4 hourly and divergence. So we're making higher highs and RSI maintaining that level. So it is bearish. Again, Canadian dollar is going to go with the US. The US could go anywhere. Okay. So pound Swiss recovered. Pound New Zealand at the moment, that's rallying. I've got a long on that one. I'm going to put a target on that. It's going to be there. So target is, for me, it's always the closest propulsion. Pound New Zealand long into that propulsion gap. New Zealand is obviously weak at the moment, so that's a long off of the RSI on the. There was an RSI on the hourly below the 75 level there. On the 4 hourly, we just tapped the 20. So same as that trade there, which if you did, you would have got out on that spike, definitely. You'll be out on that. So yeah, same thing. We're playing this support basically. So, but whether it gets up to there or not, you know, we are more bearish, but the New Zealand dollar obviously dropping those interest rates has not helped. This might be the next leg of the New Zealand dollar weakness we're seeing starting to come through this morning, because obviously we were expecting a lot more weakness on the New Zealand after dropping their interest rate so quick. So that could be what we're seeing today. Pound, beautiful monthly high. Just missed it. Didn't quite get a second position on yesterday on it because it was a spike move. Limit order triggers. Yeah, if ever you want proof of me waffling on about limit orders being placed at monthly highs and lows, there they are, painted on your chart. Yeah. Market pushed into the level and the buyers got completely squished by a fudge ton of limit orders sitting at that level. Yeah. However, sellers have just about managed to grab control after the move yesterday. So we may well have another go at that level. And it's not unusual for them to let that through and then drop. So it'll either, like I say, whenever you get to any support resistance level, you get one of 3 things happening. You get a double top, you get a lower high, or you get a higher high. one of those three things tends to play out in the middle of a reversal. Which one it will be, you don't know. So the reversal alert there will either hold and get retested, or it will not hold and you'll get a new reversal alert, or it will just come up and tap it and go. Or, that is your right shoulder. So we'll see, one or the other, but that's short. It's just a shame I didn't get another position on. If I'd have got a third on there, my average would be up here and I'd be able to target this propulsion gap. But at the moment, I'm there. And obviously this could come. That's only 150 ADR. I could easily do that in a day. New Zealand. So we know New Zealand at the moment is weak. That's coming down nicely today. Didn't quite get 2R out of that DAX. So yeah, New Zealand coming down. So we are expecting the New Zealand dollar to be weak. Again, monthly highs. Yeah, limit order triggers. Squished. So yeah, so we're waiting basically to see how much more weakness comes into that New Zealand dollar. So there's your interest rate change. The unexpected interest rate change. What we were expecting was an addition into that. Some currencies have been much weaker, CAD, US dollar, than we were anticipating. So even though the New Zealand has been weak, they've been weaker, which has given it that advantage. So we should expect, though, the New Zealand dollar to be coming down. Now, they've dropped interest rates, but they haven't given us any forward guidance as to what they're going to do next. So don't forget, every time we get this inflation figure coming down and we get a big drop in inflation, it tends to bounce, which means that it stops them putting the interest rate down 2 months in a row. Nobody's done that yet, apart from the Swiss. So it's likely that we'll see a freeze in those rates, but the market was not expecting that drop. So we're probably going to need to drop the New Zealand dollar for a bit to get to where we think we should be. And then obviously we'll see what the guidance is. So high, low, got this double top here, which potentially is now your lower high on a down leg. How far it can get and how fast it will get there, we'll have to wait and see what happens with the US dollar. If it powers up, it will get there quick. If it's going to weaken, it's probably going to just do that because the CAD will go with the US. So we'll see what happens with that one, but I've got short on at the moment from the RSI extension. In theory, you should be able to kind of take that in either direction, but you're safer on shorts than longs. And nice extension there on the hourly. So you would have taken that on the hourly or the 4 hourly. New Zealand dollar, US dollar. So yeah, nice 4 hour bearish engulfing. Again, same thing. Yeah, look at that. Doji. Yeah, it's not a coincidence, these price points. Yeah, limit orders triggering. They weren't able to hold it, but they've certainly added back into it this morning. So we're looking for that kind of action. So back down into there. So yeah, shorts. But again, this evening, the entire outlook on this and all US pairs could change. So we'll see what happens. Morning, Chucks. I'm short Euro, US dollar, Franco. Morning as well. Only trade live. Bathroom remodeling today. Exhausted. My friend's doing his bathroom at the moment. Was meant to finish it yesterday, and I saw him last night at a class I go to, and he was 1.5 tiles short. I had to giggle. So he's got to go back and get a pack of 5 big tiles because he's 1.5 short, which means he's then got 3 tiles which he's paid for and he can't use. So I said to him, why don't you just break one just for fun? Yeah, so when you're doing your first cut, just go, yep, oh dear, because you can. And then the next time you cut and you get it broken by accident, you'll be like, eek. Now I'm getting down to 1 tile spare. Anyway, joys of tiling, if anybody's done it. US dollar CAD, long on that one at the moment, only one. Not gone anywhere in the last 48 hours, really. So that's where we opened yesterday. We're down ever so slightly, but not really going anywhere at the moment, as you would expect, because we don't know what the US dollar's doing. So at the minute, we are sitting back down at the lows. So this previous high is very, very well respected. Yeah, we're back here after a big, strong run, nicely extended. But that will be determined by FOMC. If they say we are dropping interest rates 100% guaranteed in September by 0.25%, we're coming down. If they don't and they say inflation's a bit sticky, we're not 100% sure, we're going down or we're going up. We don't know. If they say inflation is way too sticky, you know what? We're not going to do it until next year now. It's going to go through the roof. Yeah. Possible. They change their mind every 5 minutes. So we'll wait and see. But again, US dollar CAD, very closely linked. Both commodity pairs with oil, both move together. So it doesn't really matter which way you trade this pair 90% of the time. You might get squeezed for a couple of weeks on something, but you'll always have an exit. So I don't mind which way I trade this at the moment. It's news. The US dollar has the most news in the market, and that news will be bullish or bearish. If it's bullish, it goes up. If it's bearish, it goes down. Doesn't matter. The only thing that can really hurt you is bear news after bear news after bear news after bear news, followed by the Canadian having bull news 3 times in a row. Nothing you can do about that. But if it does, you just got to sit through it. There you go. There's all your pairs. Done diddly done. I might just close one of those out. I'm going to trade it actually. I just put in a trailing stop on Euro New Zealand because I've got exposure on the Euro New Zealand and the Pound New Zealand. They're both in profit. If that New Zealand dollar weakness we've got continues, happy days for both. If that New Zealand dollar suddenly rallies back the other way, and that's a fake move they're putting in today, I don't want to be double exposed. Might as well just bank half of that move. So I don't think I'm going to get out of this FTSE this morning. I'm not going to trade the US this afternoon, I don't think. Not ahead of FOMC. I think it's unlikely I'll get out of that today, so it's going to be a loss, I think. Still not really moved anywhere, have we? We'll come and have a look at that one tomorrow and see where we end up. But I will keep an eye on this P&L throughout the day. Usually every sort of half an hour to an hour, I tend to have a look at it because you'll get a big, suddenly what you'll find with this this type of strategy is you'll suddenly get either a big move on the pound or a big move on the euro, which is independent of the US dollar, because obviously don't forget we're trading the 3 most heavily traded currencies on the planet. You'll suddenly get a massive move where you get a spike in the euro for an hour like that as it pulls back on that leg, but you won't get that spike in the pound because it's the euro moving, not the US dollar, not the pound. So the pound will just sit there like that in profit. And what you'll do is you'll reduce the drawdown on this one by an amount that takes that plus that into positive territory. And you can go, I'll close it all. And then if you want, you just basically hit the buy and the sell button again, or the sell button and the buy button. Doesn't matter which you pick, does it? Obviously, don't pick the same on both. That would be silly. But yeah. Interesting. So yeah, so let's say, for example, this stays exactly where it is now, right? And the euro suddenly has a pop. Yeah. And that goes down to $60 in drawdown. You can just take that $100 and stick it down there, repeat the process. But if nothing happens today to that effect and nothing moves far enough to make any money, the US dollar is going to have news this evening and it will move the market. So we just wait for that US dollar to give us an opportunity to bank one or the other. That's the edge, making sure that you're trading the thing that is going to move the US dollar. That has got to be across, which is why yesterday, as I said, the trade was the US Euro CAD and Pound CAD. the CAD I was hedging. Hedging the US today. Tomorrow's going to be a tricky decision. In fact, I don't know what you would do tomorrow. Because you've got to trade something against the euro. So what I would probably do tomorrow is trade Euro CAD and Euro US. So the euro is what I'm hedging. So I need two instruments to hedge the euro against, which move independently, CAD and the US. If that plays out and makes a profit, then I've got time to get something onto the pound. So I would probably pick the same thing. Pound US, pound CAD. Then if that pays out, I can go back to trading Euro US and pound US in the afternoon. But if that doesn't work out, can't do that. And if by the afternoon that hasn't worked out, can't do that. But that will move that, which will move that. So this is one of those ones tomorrow where you could get into trouble if you get on that euro and then all of a sudden the US pops. The US is going to pop and the CAD is going to pop. Both of those are going to go into drawdown. Possibly. It can't tell you, see. This is why I need to test all of this. Anyway. See, right now you could basically say, I'll take $127. I don't like the look of this. And I'll reduce that by $127 and take another hedge, which means you're going to have more on that euro. So the next euro move in your favor will get you out the whole lot. Don't play with it. I will try and build something to model something on this in MT5, because you can only do it in MT5, really, in the tester. There you go. That New Zealand dollar stalling that little drop at the moment. Right. Anybody got anything else they want to discuss, look at, talk about? I've been through everything pair-wise, so probably not. Back tomorrow at 2:15 for the New York session. I'm not really sure what I'm going to do tomorrow afternoon. If these markets are as flat as they are today, I don't think we've seen more than a 3-hour move. Apart from that one day with news, we haven't seen more than a 3-hour move really on anything much. So it's really, when you've got a strategy which the edge is the opening range break and there is no break because there is no volume, doesn't work, does it? So you've got to just call it at some points and say it's just not going to work because there's no volume, in which case then you're left with price action trading, which is completely unreliable. So yeah, don't know what to do with that in a minute, but I'll probably tomorrow afternoon I'll see what it's like. I'll see what the open's like this afternoon. I'll see what the open's like on the DAX and the FTSE tomorrow morning, and then I'll decide whether or not to do that in tomorrow afternoon. But if not, we'll do something else tomorrow afternoon. I don't know. We'll look at the FX pairs anyway. Right, keep your eyes on the dashboards. Anything that comes up, obviously you've got opportunities to get in. I would be very surprised to see any ADRs hit ahead of FOMC. You may do, but it's unlikely. So I'll be back tomorrow afternoon. I'll be in Telegram, Discord if you need anything until then. Other than that, I will see you next stream. Have a good one.